Do you own a UK residential property through a limited company or a partnership? Then you might be affected by a tax that is often goes unnoticed or misunderstood. It's called ATED, Annual Tax on Enveloped Dwellings. In this short video, I'll explain you what it is, who does it apply to, how much will it cost, and how to stay compliant. First, let's see what ATED is, Annual Tax on Enveloped Dwellings. ATED is a yearly tax charge when UK residential property worth over $500,000 or more is owned by a non-natural person. This is very key, non-natural person. Either it's owned by a limited company or a partnership with corporate members or a collective investment scheme. The purpose of ATED is it is designed to discourage people from holding expensive homes through companies for personal use and to avoid tax. For example, Miss B sets up a limited company and purchases home worth £1 million. Although houses held or purchased through a limited company, but she is using it for her private residence. Now ATED will apply to her. She falls under the rules and regulations of ATED. Now, in bit detail, let's see who is affected by ATED. Individuals do not pay ATED. We have just discussed that it is only applicable to non-natural persons like companies and partnerships. Let's look at where does ATED apply or who does it apply to. ATED applies if property is owned by a company or similar structure, non-natural person, property is residential, located in UK, and it's worth more than £500,000. Now let's look at the exemptions. Now the good news is many businesses may not have to pay ATED. Individuals do not pay ATED. It's only applicable on limited companies. But limited companies and businesses, if they own property, they can get a relief if the property is rented out commercially, it is used for development or trading or employee accommodation, or it's open to public as an historic house, or if it is used by charity. Please note, even when you're exempt, you must file annual return of exemption. You have to file annually to claim your exemption. For example, let's look at a couple of examples. A company owns a property in London worth 1.8 million and it's used by its director for personal use. Now ATED will apply and they will end up paying approximately £9,000 of tax per year. Second example, a property is owned by a company but is commercially rented out. Value of the property is 1 million. It's commercially rented out. In this case, relief will apply and no tax will be payable. Having said so, you still need to file your annual return for exemptions. Now, if you have to pay ATED tax, how much it is? For the financial year 24-25, if the property value is between £500,000 to 1 million, you'll end up paying £404,000 per year. If the value of the property is 1 million to 2 million, you'll have to pay £9,000. And for higher value properties, tax will increase accordingly. Please note that this tax is per property. Each property will be taxed separately or returns will have to be filed separately. If you have to file ATED return or exemptions, you have to file it by 30th of April every year, covering the period from 1st of April to 31st of March. Call it from 1st of April 2024 to 31st of March 2025, you should file your return by 30th of April. You'll need to file your ATED return, you'll have to pay your taxes, or even if you're exempt, you have to submit your relief return on the same date. So if you miss your deadlines, you may face penalties starting at £100, may go up to £1,600 or more, plus interest and penalties. If you need any further information or help regarding this, you can always contact our offices via your local property accountants.